And we continue our conversation with Doug Jurdy, wealth advisor with Heritage Financial in Green Bay. A lot of people have never used a tax preparer before. I want to let you do a commercial here. Why should they maybe reconsider that in this chaotic year?
Well, what we see is a lot of people that don't understand some of the breaks they could get or special situations. So a tax preparer would be able to ask questions and actually find out if they're qualified for that, and may pick up things that they wouldn't know and wouldn't file on themselves.
In other words, that's a very nice way of saying you can get me more than you cost.
Well, potentially.
Yeah. But I mean, you know what to look for, where to look anyway. If somebody chooses to do their own taxes, where are the major mistake areas?
Probably not understanding certain benefits they get, and depending on how you do it, if you use the old paper method, which not a lot of people do anymore, but you can skip over things easily and not realize what you could have gotten. A lot of people use things like TurboTax, which actually takes you through questions, but you've got to slow down and read those questions and understand them and answer them right. If you answer no on something, it'll just assume you were right and you may miss something.
But it seems this year especially, things have changed so quickly that it's difficult for anybody to keep up with these changes.
It is. There's been a lot of law changes. We had January 1st, the Secure Act went into place, changed a lot of things. March 27th, the CARES Act with coronavirus. And then in June, there were a number of rulings by the IRS that amended those. So it was a very changing situation throughout the year.
How has this year, how has COVID impacted our 401ks, or has it not?
Well, in that it caused the market to have a big correction, it hit values. But for some people where the stimulus, unemployment wasn't enough, one of the new rules that went in is the coronavirus-related distributions. So people that do have money in a 401k or workplace plan can actually access that without the usual penalty, and it's taxable income that they can choose to spread that over 3 years, and if they repay it within 3 years, they don't pay the tax on it. So that's one way that a lot of people miss out, where they can get some help. It would be, you know, the last resort but it is something that's
right.
there.
You don't want to take that money out.
No, not unless you have to.
Don't have to. With the stock market, how can we minimize our exposure to stocks in this crazy market of ours right now?
Well, the first thing is really making sure you're invested within your risk tolerance is the main thing. The people who get, there's been study after study, people that get the worst long-term returns are the ones that take more risk than they're comfortable with, then do real quick reactions and sell out at the wrong time or chase the exciting recent thing and get into trouble. So it's making sure that you understand how much of your investments should be in that stock market.
I know years ago, President George Bush, the elder Bush, always said, stay the course.
Yes, yes.
And that seems to be the case here in the stock market.
It's the right thing, but it's one thing logically, it's another thing emotionally when there's a roller coaster to keep with it. If
you are individually investing, is it wise right now to get into the stock market, or should we ride out this roller coaster until we get the presidential election taken care of, until we get a vaccine taken care of?
Well, that's a hard thing to say. That's why I always think there's, no good time and bad time, making sure people have the right allocation if they're putting money in, the right amount into stocks, because those are all unknowns. We don't know when we're going to be back to work, back to normal. We don't know for sure the long-term ramifications of the election. But, when we look back at history, whether it was Democrats or Republicans, in general, the market was good. There's no real way to time that political side of things.
If someone has not been in the stock market or in any kind of investment and they are now considering, say they're in their 30s, what are some of the questions that they need to ask themselves before they take that step?
Really having somebody help them, or reading about their risk tolerance, what their goals are, and diversification is the biggest thing. If somebody isn't real used to investments, they're best off using index funds or index exchange traded funds, which you're buying the market, not trying to pick individual stocks and perhaps taking too much risk or more risk than you realize.
Yeah, we always hear you need to be diversified. What does that mean?
It means basically not putting all your eggs in one basket. So it's taking a lot of risk if all of your stock exposure is just in 2 stocks. But if you spread it among 50 different companies, then if one goes under, it's not sinking your whole portfolio, just 1/5 of it, which is easier to put up with.
Yeah.
So you're spreading the risk around.
What investment opportunities do we have beside the stock market?
That's pretty hard these days. There's fixed income investing, which is interest-bearing bonds, CDs, bank accounts, but part of the coronavirus relief is the Fed lowering interest rates to very low, which means we can't earn much interest on anything. So it's pretty hard. We have people that say, can you find me something that earns a lot of interest? And there really isn't anything out there right now.
Oh, if you knew that answer, you'd be a billionaire,
Yes,
right?
Right. Yeah.
We hear the commercials, especially on radio, about investing in gold and silver. And they take the tact that the stock market is about to crash and you'd better get into gold and silver. Where do you stand on that investment?
Perhaps somebody could put a little bit in there, but long term, it generally isn't a good investment because you've got carrying costs and other things that kind of get glossed over there that tend to erode things. So there's short periods where owning gold was great, but longer periods where you would have been better off elsewhere.
And that's borderline commodities investing.
It is.
And,
yes.
and not to besmirch commodities, but you better know what you're doing
Exactly.
if you get into that game.
Yes. You can get into investments that are really leveraged. So if you don't do it right, you can lose more money than you actually put into it.
You put in, you owe. Yeah. All right, we continue with Doug Jurdy, Wealth Advisor with Heritage Financial. When we come back, so please stay with us.